Hi, I'm Kalila Reynolds and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. But before we get started, head over to takingstock-ja.com to subscribe to our newsletter. You can click the link up here or in the description box below. Now come on, let's get this money.
First up, the COVID-19 pandemic has forced the government to spend an additional $44 billion this fiscal year, with 6 months still remaining before its close. We'll speak with Finance Minister Dr. Nigel Clarke, who tabled the second supplementary estimates for the financial year. And later, the analysts weigh in on the latest market developments, a $84 million loss. That's how much Digicel bondholders, which rejected refinancing terms, are likely to lose on the principal of their investments due to the maturation of 2 bonds that were swapped. And auditors have raised the red flag on SSL Venture's financial health. We'll discuss.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
The government plans to spend $16 billion more this fiscal year in an effort to double down on stimulating the economy while protecting the vulnerable, according to the second supplementary estimates. The additional funds will go both towards capital and recurrent expenditure. The government earned more revenue than in its original projections from key sectors, including PAYE up to September, but it will also spend less on debt servicing. This will reduce the primary surplus target from 3.5% to 3.1% of GDP. A primary surplus happens when the government earns more than it spends. Among the new line items in the budget is an additional $5 billion for unemployment support through the CARE program. Additionally, they plan to spend $6 billion more on big projects, which the government hopes will have a stimulus effect by providing jobs. Jamaica National launched the first Anglophone Caribbean-owned bank in the UK last week after getting a full commercial banking license in that country last year. The new digital bank, a subsidiary of the JN Group, will initially offer retail savings and personal loan products targeting the Caribbean community as well as the wider UK market. The group says the bank is a separate entity from the UK representative office, which will continue to provide services to Jamaicans in the UK who have accounts with JN Bank in Jamaica. RJR Limited, the parent of the RJR Communications Group, has become the latest company to indicate its intention to seek out fresh capital on the stock market through an additional public offer APO. Shareholders are expected to vote on the resolutions at the company's annual general meeting later this month. The company is looking to raise share capital by 50% or by 1.21 billion new shares. One of the special resolutions to be voted on at the AGM also seeks to make amendments to the company's shareholder cap, which currently limits any single shareholder from owning more than 10% of the company to 21%. Meanwhile, Caribbean Flavors and Fragrances 10-to-1 stock split has been pushed back by 2 weeks to October 13. The stock split was initially announced for October 1 on the basis that the company would have had its annual general meeting AGM on September 25. However, the AGM only took place last week, which saw shareholders approving 2 resolutions clearing the way for the stock split. The 10-to-1 split will result in the total issued share capital of Caribbean Flavors and Fragrances being increased from 89.9 million ordinary shares to 899.2 million ordinary shares. Government will permit both PCR polymerase chain reaction and antigen tests for travelers planning to visit the island. This was among several changes approved by Cabinet to streamline the government's approach to the COVID-19 pandemic. Additionally, visitors will no longer be required to upload their COVID-19 test certificates using the Visit Jamaica platform. They will, however, be required to present the application and the usual travel authorization at the airport when they check in. Juice manufacturer Tradewinds Citrus acquired Jamaica Beverages Limited in a deal that will allow it to enter the milk business. The sale agreement signed late last month will see Tradewinds acquiring all the Bogwalk-based assets of Jamaica Beverages, including the brand Dairy Farmers. The Jamaica Beverages assets were put on the auction block to settle a court-awarded judgment amounting to $4.5 million. And Digicel bondholders who did not participate in the company's bonds swap arrangement are likely to lose the principal on their investment, worth $84 million or 12 billion Jamaican. Some investors did not take up the new bonds because in doing so, they would have been agreeing to lose nearly 70 cents on the dollar on their principal investment. But now those that held out will lose all of their principal. Digicel refinanced a number of bonds this year, reducing the company's debt load by $1.6 billion to about $5.4 billion in the process.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. And when we come back, Finance Minister Dr. Nigel Clarke breaks down the government's new spending plan. This segment of Taking Stock is brought to you by Bulwark Insurance Agent, insurance made easy, and Massey United Insurance. How good is your insurance? Welcome back to Taking Stock. $16 billion more has been added to the budget under this year's second supplementary estimates due to the economic fallout caused by the coronavirus. It's being funded primarily through a further reduction of the primary surplus target, meaning the government now plans to spend less on debt repayments. Joining me now is Finance Minister Dr. Nigel Clarke.
Welcome back, Dr. Clarke. Always a pleasure to have you on the program.
Thank you for having me, Kalila. Good to be here.
Well, let's talk about the budget. So we're now on our second supplementary estimates, and we're going to be spending nearly $17 billion more on healthcare, on education, on social programs, and on some capital spending. But on the revenue side, we're also collecting less, quite significantly less than we did last year. So we're now in a fiscal deficit, meaning the government is spending more than it earns. Explain how you're going to pay for this difference.
Well, it's being financed in two ways. The first is we're estimating that for the full 12 months, we'll be $5 billion more than budgeted in the first supplementary. That's one source of financing the extra 15.7. The second source of financing the extra 15.7 is a lowering of the primary surplus from 3.5% to 3.1%, which provides the additional $11 billion. That brings the total available for spending to $15.7 billion.
Let's just go over what the primary surplus is and why this is important.
Right. So the primary balance is the difference between government revenues and non-interest expenditure. Okay, so we have two types of expenditure. We have non-interest expenditure, which is everything except interest, and we have interest expenditure. The primary balance is the government's revenues less non-interest expenditure. And the reason why it's important is that because Jamaica has a high stock of debt, we have to reserve a certain amount of resources defined by the primary balance or surplus in order to service debt payments, right? Interest payments, as well as principal payments.
Right. So basically, the primary surplus is what we use to pay off the debt. And what you have done in the second supplementary estimate is to reduce that target. So we're not going to be spending as much on debt repayments. So let's talk about that a little bit, because this is in our law. We've had these fiscal responsibility laws now. We want to get to a certain level of debt, 60% of GDP by 2027, 28. So how does lowering the amount that we pay on debt, we pay down on debt, how is that going to affect that target in the long run?
A debt obligation is a legally binding obligation. So we can't, we don't have discretion to simply change the amount we spend on debt. That amount is fixed and fixed way in advance by the terms of our debt agreement. So the amount we spend is the same. By reducing the primary balance, however, it means that some of that debt service will be funded through deficit spending, i.e. This year we'll be running a fiscal deficit, which is obvious and was the case under the first supplementary estimates. Due to the onset of the pandemic. Now, to your question about the relationship between these actions and sort of long-term debt implications, Jamaica has a fiscal responsibility framework, which requires that in each year the budget is cast within an expenditure envelope that is consistent with Jamaica attaining a 60% debt target by a certain time in the future. That time is now the year 2027, 2028. This year, due to the unprecedented economic impact of the pandemic, the fiscal rules have been suspended. And that is similar to what is happening across the world in our region, several countries in Central America, in Latin America. Europe was the first country to suspend their fiscal rule way back in, I believe it was April or thereabouts. So suspending the fiscal rule, there's nothing about that that's unusual in the environment that we're in. However, so we suspend the fiscal rule to allow us to deal with the problems at hand. And the problems and the challenges are that we have to spend a lot on health that we would not have been spending had COVID not been around. And, you know, between what we allocated in the third supplementary of 2019-20, plus what we allocated in the first supplementary, and plus what we allocated in the second, you know, you're talking a total, I don't want to get the figure wrong here, but, you know, in excess of $9 billion additional, you know, than what was originally planned. So it's necessary for us to ensure that the pandemic doesn't engulf us. And that's why you need the extra expenditure on health, on education, providing tablets for kids in school, and so forth. Now, how do we square that with a longer term objective? Well, the time frame of 27-28, you know, is sufficiently in the future that, as we have done in the past, the opportunity to pursue higher primary surplus targets in the future when the need for this expenditure, which is temporary in nature, right? Our care program expenditure is going to total $16 billion by the time the year is done. You know, care program expenditure is not expenditure that needs to be repeated into the future as the economy recovers. So in future years, we'll be able to run higher primary surpluses, higher primary balances that would allow us to continue on the debt reduction trajectory. But for this year, given the massive collapse in GDP, which is estimated to be 8% for this fiscal year, we're going to see that the debt GDP ratio is going to climb this year, you know, unavoidably on account of the COVID-19 pandemic.
So basically, when the pandemic is over and we are able to get back to quote unquote normal or the new normal, we are going to have to tighten our belts to make up for the spending that we're doing now because of COVID.
Yeah, and well, the thing, let's put it another way. The spending that we're doing now with COVID, a lot of it is one-off. So let me give you a few examples. So far, if you include the amounts that are anticipated in the second supplementary, we would have allocated about $40 billion on account of COVID so far, okay? And $40 billion is approximately 2% of GDP. Much of that $40 billion, we won't need to continue to spend each year because these are COVID-related activities. Take, for example, the support that we've had to provide to public bodies. The central government has had to provide support to the NWC, to the UDC, to the Passport and Immigration Office, because the fees and the earnings that they would normally have been depressed in the COVID environment where people are not moving as much, they're not moving internationally, and economic activity has been suppressed.
You mentioned that fiscal rules have been suspended in Jamaica and around the world because of the pandemic, and that we have to turn to deficit financing in part. So does this mean that we're going to have to increase borrowing, or have we already increased borrowing?
When we speak about debt increasing, we are primarily speaking about the debt to GDP ratio increasing. And you can understand that the nominal amount of debt can remain the same, and the debt to GDP ratio goes up because GDP has declined. We don't expect nominal debt to change significantly. The factors that will affect our nominal debt would be we'd have drawn down on a rapid financing instrument from the fund. We would have drawn down on, you know, funds from the World Bank and the IDB. But those are small amounts in the context of Jamaica's approximately, and giving approximate numbers here, $15 billion of debt. Okay, so those amounts don't change the nominal stock materially. Also, there would been a movement in exchange rate, which would change the nominal amount of the foreign debt. But again, those numbers are not, it's not as if debt is going up by 20% or 15% or any number anywhere close to that. The impact really is on the relationship between the size of the debt and the size of the economy. And because the economy is going to be contracted by 18% in the first quarter. And for the full year, we're expecting a contraction of about 8%. It means that ratio, which is an important ratio because it talks about the ability of a country to be able to service its debt, that ratio is expected to climb from the low 90s, up to, 100 or maybe slightly above. So I hope I've answered your question. The nominal amount of the debt, today still stands at about 2.1 trillion Jamaican dollars.
Okay. Let's look at the government spending, particularly the capital spending. So one of the things that you've outlined in your presentation on the second supplementary estimates is that you want to have essentially a stimulating effect on the economy by increasing capital spending. These are large government projects. Most of that money is going to go towards the South Coast Improvement Highway. What other capital projects are you looking at?
$4.6 billion is for the South Coast Improvement Highway. And we believe that's a public investment that is aligned with increasing economic activity and maintaining jobs, which is very crucial at this time. And as I said in my opening presentation, it sends the right signal to the private sector that the government is confident about the future and that they should invest as well in as much as we are. The additional amount to make up the seven includes about $2.2 billion on social protection, which is on the public investment side of the ledger for historical reasons. So we've increased the provision to social protection and, from $10 billion to over 10 point something billion to 13 point something billion between the original budget and the second supplementary. And again, investing in our people and ensuring that those who are hardest hit, that we make some provision for them to help cushion the impact of the pandemic.
Looking again at the numbers that you outlined in your presentation, Minister, one of the interesting things that caught my attention was the PAYE receipts. And Keith Duncan, the chairman of EPOC, had given us a hint of those numbers probably a week or two before your presentation. PAYE collections are actually up. They're actually up over last year. And something that he concluded from that was that perhaps it's because those people who have been laid off due to COVID fall beneath the PAYE threshold. So if that conclusion is right, wouldn't that make a case for the government to bring back the compassionate grant?
PAYE, which for your listeners or viewers, is the pay-as-you-earn tax, which is deducted, the payroll tax that's deducted from the emoluments of individuals who earn above the $1.5 million threshold. And the fact that has not only been maintained through COVID, PAYE earnings, but has increased is quite significant. In previous crises, the global financial crisis and previous crises, which had much more limited and muted effect on the Jamaican economy than the COVID crisis, PAYE would have taken a beating because the impact, the nature of that crisis was different. So you had, in this crisis, what appears to be happening, and particularly because of how it's affecting businesses, right? It affects businesses that cannot transition to an online platform or environment. And in particular, in the Jamaican context, the businesses that are severely affected are in the tourism sector, in the entertainment sector, in the restaurant sector, and so forth. And the employment in those sectors, the kind of jobs that are available in those sectors, primarily jobs that pay below the income tax threshold, which would be the plausible explanation for the observation that payroll taxes have actually increased year over year despite the pandemic. Now, that, Kalila, is an affirmation for the government's policy for the Set Cash and the Best Cash program. recall what the Set Cash program is. The Set Cash program provides income support to anyone from any sector who was employed prior to the pandemic and lost their job due to the onset of the COVID-19 pandemic. And we have had tens of thousands of people apply and get through. And since March, we have made stipends available to those persons. And I announced as a part of the second supplementary that we will be extending those payments to December. So that would be 9 months of unemployment support to persons who are earning below the income tax threshold and who are laid off due to COVID. The best cash component now is sector specific, and that is geared at the hardest hit sector, which is the tourism sector. And what it does is it provides support to those enterprises to retain on their payrolls persons who earn less than 1.5 million, i.e. right now, occupancy is really low, in some places non-existent. And we say, look, if you maintain the waiter, the bartender, the person who works in the ground staff, the people who change beds in the rooms, presumably most of those persons earn below the threshold in terms of their basic income. We say, look, you keep that person on staff, we will provide a stipend for each of those people that you keep on staff. So again, that's aligned with the data. We are supporting employment where employment has been hit. And again, like the Set Cash, the best cash, we are extending until December. So it will be 9 months in total.
You mentioned tourism, and we all know how hard tourism has been hit. And you've said repeatedly, other people have said as well, that Jamaica's economic recovery depends largely on the recovery of tourism. However, I don't know how likely it is that tourism is going to have well, certainly not a full recovery anytime soon, not until people feel comfortable traveling again. We have all these eggs in the tourism baskets. Don't we need to spread out those eggs some more and try to boost the productive sector more right now?
Well, we definitely need to diversify our economy. I mean, that is, that's a question that needs no debate. And the government will be looking to diversify into other areas to ensure we backward integrate into agriculture and take full advantage of the opportunities there, that we take advantage of the natural, or we make use of the natural advantages that we have in the logistics space to create jobs and to boost economic activity. And then we look to even newer sectors in software development, in programming, and so forth. And we deepen.
So what support is being given to those sectors now, since those have the ability to make up for the dollars that we've lost from tourism?
Right. So those sectors, the normal or the apparatus that the government has through different ministries. The Ministry of Finance can't do everything, but through the Ministries of Industry, Investment and Commerce, the Ministry of Agriculture, and so forth, there are a plethora of programs to try and make those industries more efficient. I'll share with you, or to boost the production output of those industries. I'll share with you one or two examples. With respect to BPO, we signed an agreement with the IDB. I signed it as Minister of Finance 2 years ago, or a year and a half ago, and it's coming into effect now, to train persons to be able to take on higher value-added jobs in the business outsourcing space. And also, the second component of it is to equip JAMPRO to be able to attract those investors and operators who operate in the higher value space. There are strategic moves being made in agriculture as well to ensure that we are able to take advantage of large-scale farming and so forth. And much of our, earlier installments of our CARE program would have been geared to providing productivity incentives to farmers, over $800 million of productivity incentives that were announced in the first part of the CARE program.
One last one before you go, Minister. Somebody tweeted me just today a screenshot of customs duties. They somebody living in the diaspora wanted to send tablets to their, I think it was their nephew or somebody back home here, so that they could, do the online learning. But they were hit with this, the person receiving it was hit with this very high customs duty on the tablet. And so question has been asked, is there the possibility of the government waiving customs duties for electronic devices like tablets and laptops, especially for students?
The first thing I'll say is that there are no custom duties on laptops. The tweet mentioned that the person brought in 2 phones and 1 tablet. Now, 2 phones, it could be, Samsung Galaxy or high-end iPhones, I don't know. But certainly, high-end phones definitely attract duty. So, more information would be needed to understand that particular case. If the person has an invoice that can, show, I believe that the person didn't have an invoice and values were imputed. And I believe the Commission of Customers is, reaching out to that customer, see if they have an invoice that can establish what the values are. But if you look at the tweet, Kalila, it mentioned 2 phones and a laptop. And phones certainly attract customs duty and, other government-imposed taxes. But
so there's no duty on laptops right now. What about on tablets?
There's no custom duty on laptops or tablets.
Well, thanks for joining me again, Minister.
My pleasure, Kalila. Thank you for having me.
And stay safe.
Thank you. You as well.
Up next, it's Light Bill Maths, and stay tuned. We've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agent, insurance made easy, and Massey United Insurance. How good is your insurance? Hey guys, Teacher K is back, and this time I'm taking you outside to understand your meter. As you know, since COVID started, I've been watching my light bill like a hawk, trying to understand every single charge on my bill. And so I had the bright idea to come and try read my meter to just make sure everything lines up with what's on the bill. I have one of the new smart meters, as you can see. But hear what? I came and looked at this thing and I had no idea what all these numbers are. So I had to call in JPS, the reinforcements, and they've sent somebody to my house to explain how to understand and how to read your meter. Hi, Renee. Welcome to my humble abode.
Thanks for having me, Kalila.
Please explain this meter to me.
It's my absolute pleasure to explain to you and our other customers.
Awesome.
So it's the aim of JPS by 2024 to have all customers with a new smart meter. The smart meter will provide lots of benefits to our customers. Remote connection, you can monitor your consumption through our My JPS mobile app. Currently in KSA North, Kingston and St. Andrew North, St. Catherine and Clarendon, we are changing out these analog meters to the new smart meters. We will also be in some parts of Kingston and St. Andrew South. So Harbourview, Bull Bay, look out for us.
How many people have smart meters now?
We are approaching almost 300,000 customers having smart meters. That will be approximately 50% of the JPS customer population. So this here is your meter number, 2408260. Right? That's the first thing you will see on all meters. Then it will continue to scroll until it gets to channel 4 or channel 1, depending on the meter that you have, and you'll see the kWh reading. That is 11501. That is the reading that is used to calculate your monthly consumption or your monthly energy use.
6 is what now? This is a different channel for somebody else?
For something else, kWh.
So that doesn't apply to me?
That does not apply
7
to you.
doesn't apply to me?
Not to you.
So really just 2 things would apply to me on this meter?
For you as
just
a
the meter
residential
number and channel 4?
That's correct.
Those are the only 2 things that we need to know. So it's not that complicated.
No. It's okay if when you're looking at the meter, you'll see busy appear on the screen of the meter, because that simply means that the meter is synchronizing with the network. So each time we try to communicate or ping the meter, you'll see something like that come up on the meter. And it will just be displayed in the digital screen as busy, BUSY. You'll see it there. For this particular smart meter, the kWh reading is on channel 1. And Kalila's meter before it was on channel 4. This meter also gives you the date, October 9th, right? And it also gives you the time. So currently it's 12:11 p.m.
Thank you so much, Renee. That was a whole lot easier than I expected. You think I can read it myself now?
Absolutely. Kalila,
All right.
give us a try.
All right, so on channel 1, where it says kWh, that is your meter reading. And this meter isn't actually connected to anything, so it's 00. There's no consumption. Channel 2 is the date. There's the date, 2020. Channel 3 is the time. And let's see what channel 4 says. Then channel 4 comes up. Channel 4.
This one doesn't have channel 4.
This one doesn't have a channel 4. But on my meter, channel 4 shows me the reading. And then channel 1 shows me the meter number, right?
Meter number is the first thing you see.
The meter number will be the first thing you see on my particular meter. So it's not that hard. You guys, go outside and read your own meter now and tell me if you're able to do it, if you have a smart meter.
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange advanced with a combined index gaining less than 1%. 100 stocks traded across both the main and junior markets of the JC for the week ending Friday, October 9, 2020. 43 advanced, 47 declined, and 10 stayed the same. Nearly 90 million shares changed hands on the Jamaican dollar market, totaling nearly $446 million. Trans-Jamaican Highway traded the most, taking up nearly 18% of market volume. The stock gained 3 cents to open the week at $1.28. Wigton Wind Farm ordinary shares traded the second highest, with people buying and selling nearly 13 million shares in the company. Wigton remained unchanged to open the week at 77 cents. And a Tropical Battery Company rounded out the most traded, taking up 12% of market volume. The stock lost 6 cents to open the week at $1.09. Now let's see who had the biggest gains. Consolidated Bakers Jamaica jumped 31% to close last week at $1.47. JMMB Group 7.25% VR Jamaican dollar CR preference shares rose 22% to close last week at $1.48. And Stationery and Office Supplies shares rounded out the biggest gains to close the week at $5.60. On the losing side now, Knutsford Express Services fell 18% to close last week at $5.64. Fosrich Company fell 16% to end last week at $3.27 a share. Epley lost nearly 16%, down to $19.08. Market recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers and Proven Wealth. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by investment research and sovereign risk analyst at JMMB Group, Leovaughni Dillon, and young investor at the University of the West Indies, David Rose. Welcome, Leovaughni. Welcome, David.
Hi, Kalila. Good to see you again.
Hello. So David, I see you broke some news about RJR looking to raise some funds for an APO. What's going on there?
Well, they haven't necessarily confirmed if it's going to be an APO, but the way they've actually aligned their notes of the AGM is an indication of an APO. So in the notes of the AGM, you have a few special resolutions, and one of those special resolutions is actually to increase the company's issued share capital, authorized share capital, to about 3.4 billion units. And that's going to be a 50% increase from the current around 2.1 billion units, I believe, right now. And that's basically about 1.2 billion new units of shares that they want to create. And they're also amending part of their articles, which won't become effective until the Minister with Information, which should be Favor Williams in this case, amends their license. Because for RJR, in the article is actually a share cap of 10%. So no share will come more than 10%, similar to like what Wigton has in their general coverage to protect shareholders in that case. So they want to amend it from 10% to 21%. And currently, only the top 3 shareholders only own about 6.8% each in RJR. So for them to actually make an amendment now, to especially increase that capital and overall number of shares the person can own up to 21%, means that they're really expecting for the 10% cap to be surpassed. So right now, RJR is kind of, as you would say, trying to navigate their way through and restructure themselves. I thought back in May, they laid off staff, they had to make pay cuts, and a lot of the programs or activities that they should have on the normal events aren't happening right now.
Right.
So you have school challenge quiz, spelling bee, all these typical events that would have driven TV viewership, and even the Gleaner is suffering a decline in print. That's basically hammering them significantly. And remember, the company wanted to actually push for the digital switch over, which is basically the switch from analog technology to digital technology for television systems. So I did some math, and from a range of $1 to $1.25, that's between $1.21 to $1.5 billion worth in new capital raised. The company will make the final details public later at the AGM, which also has resolutions to actually amend the articles to make it for them to have virtual AGMs.
And when is that AGM?
It's October 28th. 7 companies so far. Barita's executed. We have Sterling, Derrimon, Barita, Panjam, Pulse, RJR. There's too many companies coming to market capital right now.
But it could also be a rights issue. It doesn't necessarily have to be an APO. Just seems that that's the trend lately.
You're right. They haven't specified directly which way they're going to do it. But the way they structured it, especially that share capital removal, was pretty interesting.
But you're right. So it's been a really difficult time for many media companies, RJR among them. So have we gotten any hints what they might use a capital raise for?
Well, no. So when I went through the MD&A and the managing director and chairman statement, I didn't get any sense or direction of where they're going to deploy those funds. Right now, I think the first deployment of some of the capital, if raised, would be to reinvigorate some of the operations of the different subsidiaries, just to make sure they have a solid capital base going into next year. Because right now, a lot of the opportunities that they've had or usually have in normal times to generate income is down. So even though the group itself is still profitable at the moment, the print division is actually suffering significantly right now. And the digital switch over is expected to cost a significant amount of money as well as a broadcaster.
Right. Leovaughni, another company that's been in the news a lot lately is SSL VC, SSL Venture Capital, and it seems like whenever we hear something about them, it's usually something negative. What's going on with SSL VC now?
Well, they're having a tough time. Like a lot of companies, they've been negatively impacted by COVID. The case with them, even before COVID, like 2019, the company had negative equity, meaning that they had more liabilities than they had assets. This is before COVID. COVID just made the problem worse. Mm-hmm. And then a lot of the portfolio companies, they had to write down the value of those assets. Now Muse 360, the CEO there left, they have to write that down. And basically what's happened is that the company got an injection of capital in 2019, about 140 million. Basically, they burned through all of that with the losses that they experienced in 2020, as in like up to the period ended June 2020. So it's a bad situation because right now the negative equity on the balance sheets are about 200 million negative equity.
Ouch.
So and that's a problem because what's happening here now, the company management indicated that they plan to meet in order to see the way going forward. In that meeting now, they might figure out a way to raise some more funds. As it is right now, the majority of the company's capital is coming from related parties. So that's debt that they own to SSL Stocks and Securities Limited, and they're also money owed to SSL Growth Equity. So these really related parties are really powering the company right now in terms of providing funding, so they might be able to raise more that way. Going to the market, of course, will be very difficult given the current structure of the company. So they might have to find new ways to raise it. So this
Not
is
just
another
given the structure of the company, also given investor confidence or lack thereof.
Yes, because all right, the nature of the company is a venture capital fund. Now, how those work on a global scale is that they would buy into small new companies, grow those companies. The nature of that business model, though, is that a lot of the companies will fail. So how it's done globally, you buy into a lot of companies. And then the few that does very well. So let's say, for example, in the US, like your Facebook and your Twitter that do very well, you kind of pay for the losses on all the others that don't so well. The thing is, in their case, they had a few portfolio companies that are not doing so hot. COVID just made that worse. And then that's the situation that they're in. So the problem is basically none of these entities, unfortunately, doing very well that they have. Blue Dot was doing fairly okay, but in 2019 creates a problem, and then they had to sell that state down. So yeah, so basically they're just in a tough situation.
So they don't have any stars right now.
No, they don't have any stars right now. And this is the thing about the nature, though. The company as it is, right? Again, they can raise some money. Again, how they do that is gonna be up in the air. But what it shows is that investors have to be careful, because what happens, with some of these newer companies, sometimes they go to the moon, but sometimes you can have issues like this that occur with these significant losses got racked up, and then you have problems for minority shareholders. So recently, I had some, Sweet River had some problems too, and then again this one, and then you might have a few of the smaller companies on the junior market that could be meeting into issues in the near term because they're very small or negative equity, which can be a problem. The case with them, hopefully they can work it out. There's not a lot of shareholders in it, about 330 shareholders in it. The top 10 have about 95% of the holding, so it's not a wildly held company. So any hiccups here is not going to, impact the market overall, but it's just a cautionary tale for investors that you need to be, do some homework on these companies. Everybody can do it. If not, you invest in a fund or something, a fund manager handle that. But yeah, this is a cautionary tale for investors in terms of not just, buying something because it's hot. Because I remember when they made the switch over in 2018, they made the switch over with a reverse takeover where C2W Music wasn't doing so hot, and then came in with additional capital, did the reverse takeover and pivoted to this business model in terms of venture capital. Now, it wasn't a bad idea. It didn't necessarily mean it was bad, but what it was risky, because venture capital by nature, the business model, especially when you have a relatively small portfolio, because you're not able to diversify. So if they had a bigger portfolio, for example, for argument's sake, $2-3 billion, and they were able to buy a small stake in a lot of companies, then the business model would have been a little bit more stable in the sense that some would fail, some would do well, and overall it could probably see some steady growth. The thing is, the portfolio is relatively small. So granted, some persons can take that risk, but for the majority, this company was not structured in terms of the VC for the majority of investors. So that is, another cautionary tale for investors out there to basically do the homework. If you can't do it, find somebody that can and lean on that in terms of either advisor or, a broker. But yeah, some homework.
Call you guys there at JMMB.
Well, you said it.
Yeah, right. You have to get your plug in there, Leo. Let's talk a little bit about Digicel. So they're back in the news again as well. Their restructuring has been, continuing. And there's now some news that bondholders who didn't accept the deal stand to lose basically everything. So give us that update. Let's start with you, David, then Leo, you can join in.
So what happened was that Digicel had issued a sizable amount of debt over the years. Initially, they wanted to go to the NYSE, the New York Stock Exchange, to get equity capital to fund their operations. When that didn't pan out, the company turned to debt as a way to fuel its operational activities. However, in the acceleration of COVID and persons switching over to, as you would say, VoIP, or over internet protocol devices or mediums, there was a decline in their main revenue source, which is basically the mobile handsets. So right now, especially using credit and so on, and Digicel had debt, which was in hard currency, US dollars, but the currency of the countries they're actually generating the revenue from was continually devaluing. So that also is impacting the company in terms of paying back on that debt. So they did this recent bond swap, restructure and have a nice haircut on some of that debt, brought it down by like about $1.6 billion, 1.9 I think, US dollars specifically. However, some of the investors, which are the retail ones, have technically been burned now because our Digicel site was specifically designed and intended only for like specified investors, accredited, or those in the US market. They somehow made it way into Jamaican market. I remember back in, I think it was June, you had someone nationwide who was talking about her fate with the Digicel bond, and that was pretty unfortunate. So some of these actual restructured bonds, it's what basically is a massive haircut. So,
yeah, we've been getting emails about it too from people who. So there's the haircut is one issue, but then for the people who decided not to accept the haircut, they're being left with nothing at all, basically. Leo, do you guys have any clients who have some of these bonds?
Well, I don't really work on that side of the business. So I'm more strictly in research. So, that's something for another team members. I know it's team to sort out, but I'm not aware of it in my capacity, right? Mm-hmm. Yeah. So the thing is about that bond, it is an unfortunate situation that has occurred. Again, it kind of goes back to what I was saying earlier about, understanding your risk tolerance. The thing is with investments, the key thing is that risk and return goes hand in hand. So if you buy into an asset, and in this case, I guess the Digicel bond, and the return seems phenomenal, there's a reason why that return might be that good because of the risk associated with it. So the thing is, you have to assess that because you're not really going to get that return without taking that risk. And you need to assess whether or not you can accept that kind of risk. Now, it is again an unfortunate situation. I mean, for years now, Digicel is having problems. And it's kind of the nature of the telecom space in Jamaica, at least in more recent times, because of course, before Lime was delisted, you saw the massive negative equity and issues that they had, right? So the space itself is, relatively competitive, even though it's just like two major players, relatively competitive. The difference with Lime Flow, now is because they had a large peer that was able to support it through the fact that even though it was having pressures. So then what happens is that the space competition, I remember when several years ago, and Lime had reduced the rate on calls from like $9 per minute to about like $2 a minute on calls, and of course per second billing. And then that created a massive contraction. At that point, Lime had to write out billions of dollars in assets and put their equity negative in order to do it, to show how dramatic a move that was, right? And then, of course, as David had said before, you have the whole person switching over to things like WhatsApp calling, using more data instead of, voice. And then because of that, you have further compression in the revenue streams. So it's just an overall, challenges. And then the industry requires a lot of investment. So for example, Digicel, of course, spent a lot of money building out its internet infrastructure in Jamaica to offer that service. And then, as again, what David alluded to, the debt was in US. A lot of the earnings in JMD, on average, it depreciates about 6% per year. So then they have problems.
But thanks for joining me today, Leo and David. Good insights as always.
You're welcome, Kalila.
All right, thank you.
This segment of Taking Stock, The Analysts, was brought to you by Jamaica Money Market Brokers and Proven Wealth. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at takingstock-ja.com and turn on those post notifications so that you can be the first to see all of my videos. We want to help people learn more about money so we can all get this money together. Now this week on Money Mondays JA, we're taking a look at Derrimon trading ahead of their additional public offer. Follow me on Instagram and Twitter at Kalila Ray and follow at Taking Stock JA on Instagram. If you want to connect with the analysts this week, check the description box below for their contact information. Now tell a friend about Taking Stock. Investing is the new sexy, so let's make it cool to talk about money. I'm Kalila Reynolds. Stay safe.